All right, let's rock and roll. So goal today was I'm going to do a quick portfolio review. And whenever I say quick, it takes 5 times longer than I anticipate, but we're going to do it anyway. So we're going to go through the Income Navigator portfolio. We'll talk about a few things here, but let's get into the account. So having a good day. We're up, another $4,000 in the Income Navigator account today. So that's pretty nice to see. We've had a really good couple of sessions. And as I posted in my daily video, and again, if you're not watching them, I would recommend it because a lot of the questions you guys are asking have all been addressed in there. But we're up 20 grand in 2 days, just in net lick alone. And then today we are up another 4 grand. So we're up $24,000 just in net lick alone. So that's pretty nice. We'll take that. Some people may not make that, in a month or so. So let's keep it going, and we'll keep going. But if we have a account that started at 250 grand at the beginning of the year, we're up about 75 grand on the year. And if you're up 25 grand in 3 days, that's a 10% move on the overall account since the beginning of the year in just 3 days. So we'll take it. It works, but we got a lot more work to do. So we'll get back to the grindstone. Just a quick look at activity today. Here's what has transpired today on the first day of the month, and it's been a good first day. So you can see down here we had a gold strangle close for a 50% winner, and then that was actually last night at about 11:15 at night while I was driving through a blizzard here in Cleveland, and then we had another one happen again just a little bit ago. So 2 gold strangles closed here today, which is fantastic. We also had an ES strangle. So you can see this ES strangle closed. We also had an ES naked put close here. And then we also had this ZB naked put close. So 5 closed trades on the session today, which is pretty good for the first day of a month. Total gains today is a little over 4 grand, so not bad for 4 grand in a day. Anyway, so we had a lot come off. It's also cut our BP usage significantly down, and this is why I haven't been really that worried about trying to adjust my BP. Even though if you're watching the daily videos, you know that my BP has been fluctuating around 70 to 80%. For the most part, for almost 2 to 3 weeks. I think, in fact, I can go back a little farther. Since about September 15th, probably closer to September 20th, but since about September 20th, my buying power has been between 70 and 80% used, which I know is beyond the maximum that we like to see. However, I feel I'm good enough to adjust if I need to. It gives me, I have enough room there to adjust. I also feel that the market had been selling off. Volatility's up. Can it continue to sell off? Can volatility continue to increase? Sure, it can. But I feel that we were in an overdone level, and with VIX, in the 20s, and Igor just beat me to it there. So when VIX goes from 12 to 22 on that way up, it's going to expand your buying power, and that span margin is going to come up. That's why we start at 50% so that we can go to 70 or 80% and hang there while VIX hangs around 20. Now VIX is back down to 17 today. So VIX has definitely come off its highs. It's down another 4% today, but it's huge from 22 back to 17. You got a 25% reduction in volatility in just a couple sessions here. But that's why I feel I can go over my 50 when we're in a sell-off or when span margin's increasing. I feel pretty comfortable in there. Do I want to stay at 60, 70, 80 all year long? No, I think that's irresponsible to do that of me. But I also feel that I've been doing it long enough that, hey, if I get to 60, 70, 80%, I'm not panicking because I can do things to fix that. And one of the things I wanted to make sure we do, and we'll keep on a little Fed watch here. So as we get closer, we'll do a little live Fed watching on the 5 or 3-minute, 5-minute chart, and we'll take a look at the Fed when 230 hits. So somebody just maybe remind me there. I'll try to make sure I remember it. We'll switch over and just see what happens. But again, going back to that, I feel that trades were going to come off as volatility came out, and all I wanted to do was just see. I was probably over leveraged a tad. And how do you tell you're over leveraged? Not because BP was at 60 or 70. Okay, you could have been perfectly set, in my opinion, and be at 60 or 70 buying power simply because span margin and volatility caused that increase. It doesn't mean I was technically over leveraged. As far as how many trades I have on, it means I'm a little over leveraged because my BP is exceeding those norms. But I felt I think that's why theta to me makes a big difference. When I'm looking at my theta, and my theta was 2200 on October 20th. My theta was 2100 on the 27th of this month. So just 2 days ago, my theta was over 2000. Look at my theta today. It's 1200 right now. That theta tells me that if it's way outside of my ranges of like 0.4, 0.5, I mean, it's been in the 0.6 something of a percent range. That tells me I have probably a few too many trades on, and I'll just let those trades come off, which will fix some BP. It'll fix theta. So it'll fix a lot of things. And that's what happened today. So as we got these 5 trades that came off today, made a big difference in our theta. I mean, the theta dropped almost in half. I mean, yesterday, well, not in half, but in half from where it was a couple weeks ago, but it was also at 1900 on the 30th and 1700 yesterday, and theta's down to 1200 because these trades came off. So theta's normalized a bit back into a decent range, and it's not about all of the theta you can get. You can over leverage to get theta. So somebody had made a comment like, hey, I want as much theta as possible. I don't want as much theta as possible because that means I probably have to over leverage. So I want as much theta as possible based upon my buying power. My theta got a little overdone because I think I had a few too many trades on, but I felt I could close those trades if need be. And I think that's the difference once you get some experience out there, is knowing when you can adjust and when you should be pulling the ripcord and keeping an eye on what things are doing. So anyway, let's just run through the account. I hope that makes some sense to you guys, and we'll look at some of those numbers. So real quick, let's look at the Aussie dollar futures. This is a 112 trade. This thing has 2 days to go, and I'm still sitting at an 84% on the naked put. I don't know why, but it's just sticky. I'm not going to do anything here. I'm just going to let this whole thing expire in 2 days. I don't even trust these numbers. Are completely wacko up here anyway. But we'll let this thing expire for a full profit. Nothing to do on 6A. We got 2 days to go, and again, that's going to free up, another 3,300 in buying power. So we'll be redeploying that. All right, what are we doing in oil? We got lots of stuff going on in oil. So right now we've got 2 strangles in here. One's down 14%, one's up 16%. So nothing to do there on these strangles. And when you're looking at a 60 put and a 100 call roughly, and we're sitting at 80, that's pretty doggone centered to me. So we're exactly in the middle on this one. And then this one is 67, 108. So we're pretty doggone centered, in my opinion. So nothing to do there. Here's a 112 trade on. This thing's been working for 23 days. It's fine. There's nothing to do here. We're at 36%, up a couple $100, nothing to do. And then I do have these naked puts on. These are down here. I really like oil overall. I just feel that with everything going on in the Middle East and everything going on with inventory levels, that oil's got a floor beneath it. And then maybe that floor is 78 to 80. Maybe that floor is 76. Maybe that floor is even 70. I don't know what it is, but I feel it's in the 78 range, which is why I'm okay selling these naked puts down here. They're okay. So I got plenty of time on these naked puts. Yeah, they're down, but not down a big deal. And oil, so nothing to do there. Here's another 112. This one's up 115% with 14 days to go. Because oil's been dropping, naked puts sitting at 53%, nothing to do there. And then you have this put debit spread. It's got some value to it. It's a decent little put debit spread that we put on. The maximum I'm going to get here is $1 times 3 contracts. So I could make, $3,000 if we get into the trap. We're not far from that trap in 14 days. So if we drop more, we could make some money. If I closed it right now, all right, we would make a nice little $1,000 on this thing. So roughly 35-cent credit times 1,000 multiplier puts us in there times 3 trades, 1,050. So not too bad on that. We make $1,000 if we close these. So you can't really roll them. It's not really worth rolling something that's only one apart. I mean, I could roll, I think, a half, but I don't think that's really worth it knowing this. So let's see what happens. We got $1,000 profit right now on our put debit spread if we close it right now, which is not bad. You put this thing on thinking that, okay, this naked put is all my income here, and I'm going to make a decent amount on this. So at 32 cents, okay, times 1,000 multiplier times 6 credits, okay, that's $1,900. It's cut in half right now, so we're up $1,000 on that. So I think overall we'll keep an eye on where we are on this particular trade. Nothing to do right now, but I'm going to make $1,900 when this naked put comes off, as long as nothing goes awry. And if we're able to get at least $1,000 extra, or $1,500 extra on this, I will try for that. So I'm going to leave that alone right now. I'm not going to do anything with that, but I would not hold anybody, responsible for making a bad decision and closing these to make $1,000 here today. So you certainly can do it. I certainly think that if you're in this trade, you could close and take that off and take your $1,000 and go home. I'm going to go with door number 2. And we're going to see if oil continues to drop, because if you look at the oil chart, it doesn't really look like it's bottoming. So there's oil on it. ES, let's get into ES. So these are the newer trades on ES. We've got a strangle here. This one's up 13%, nothing to do. We got a strangle down here. This one's up 15%, nothing to do. So these 2 strangles that are more recent, this is recent. This thing's been on for 47 days, and this one's been on for 20. The strangle I closed today on ES, that thing was open for 55 days, and the gold strangle I just closed was 61. So I had to wait longer than my normal 30 days for those, but I'm okay with that. So we got to see, we got to see a little bit of how long strangles can take in a downtrend, but they still worked out profitably, and these 2 are still in good shape. All right, so we do have a long-term 112 on. This thing's only been on for 60 days. Naked puts, there's nothing to do on those. The put debit spread on these, if I look at the put debit spread here, and this is how I typically look, I'm looking at the current mark situation. So current mark situation, I know I got a 50 wide. Is this thing looking pretty good? So 118, minus 143, 144, something there. It's about $26. So I can get $26 to close this out. So if I go to close this position, 25. All right, so $25 to close this position out. You close the full thing, I could close today, make $2,400 and be a pretty happy camper. I mean, who's not going to take $2,400 on a put debit spread right now on a trade that's one of the newer trades? And we are below both of these numbers, but you're starting to inch up here at 42.75 on ES, and we'll see what happens at 2:30 today, and with Apple and everything else going on this week. So again, is this a roll possibility? It could be. So if you take a look at this, at rolling up the short put, and I really moved to rolling up the short put. Let's look at both. So let's look at a roll down. So if I wanted to roll this thing down here, let's take a look. All right, we have the 43.50, and let's say we want to roll it down half the width to 42.25. I would take in, I'll make a little note to myself here. You know, we're going to take in what, $12.50. It's not bad. 2 contracts, $13. Now that's $1,300 to roll. To me, if it's over 25% of the total profit of the of the PDS, or 50% of the width, which again on a 25 wide roll, if you're getting more than 12.50, to me, I think it's worth the roll. So that's why I would roll. So if you roll down, I'm going to get what, maybe 12.75, $13 to roll down. If I want to look at it the other way and I want to roll up, okay, let's do a quick roll. I got to make sure the expirations are in the same cycle here, but I want to roll up here. I'm not going to make as much money. So we know that when we roll up the short puts, we make about $1 less or so. However, you're making $1 less, which $1 is $100 with 2 contracts on ES. I'm going to make $100 less, but I'm still going to book, $1,200 in profit. So I can get, would you give up $100 in that? But what it does is it keeps this long put here at 43.50 intact, which means with our price below here, if I roll down, I'm out of the trap at 43.25. If I rolled the 43.50 down and this thing runs up 50 points, and can ES run 50 points in the next 58 days? Well, hell yeah, it can. Okay, so you got a good chance that this thing's going to pop out of this trap. Okay, I got a better chance if I roll up the shorts here, okay, and leave this long, because now we have to go up 75 points. It can still happen, but it's tougher to go up 75 points to lose the trap than it would be to go up 50 points and lose the trap. So that's why I'm more partial now to rolling up these naked puts. I'm not quite getting 12.5, but I'm pretty doggone close to it. So I'm going to put in an order to see if I can roll that. So we'll let this roll down here. Am I going to get 12? Maybe not. I'm probably not going to get 12.25 at all. Let's give it a $12 and let's see what happens today. Maybe in the next 8 minutes, if the market tanks, that'll get triggered. Maybe if the market rallies, I pull this trade off and I just wait a little bit longer. Or I could chase a little bit and move this thing down to about 11.75. Big deal. I'm giving up a little bit of extra profit, probably $100, but I'm locking in a $1,200 gain. So I do like that on this. So I'm moving this one up. Nothing else to do on any of these other ones. Now this is the only one that's in the money just due to timing. This one here, the naked puts, only a 28% P&L. There's no, you're only at like a $12 total move on the PDS, nothing to do there. This one here, 33% on the naked puts, nothing to do. And if I look at these, it's only about a $9 difference. That's not enough to get me out of bed. And then if I look at this one here, 38% on the naked puts, nothing to do. And this one's only $8. Again, not enough to do anything. So we'll do nothing more on any of these trades. So nothing to do on those. Let's take a look here. So we talked about this the other day. When buying power was getting high, I did put this relief put on. So I spent $140 to buy $7,000 worth of buying power relief. Most likely, if the market keeps going up, it's going to expire tomorrow, I'm going to lose $140. I don't care. I'll go ahead and put on some kind of a 0 DTE trade tomorrow and pay for it or something like that, or I'll just eat the $140. So I'm not too worried about that. But what this did do was it bought me a $7,000 buying power relief. And was that important? It was when I put this thing on 6 days ago, because 6 days ago I was hitting 80% on my buying power and starting to get up there a bit. So I wanted to make sure I bought a little relief. That's all this one was. It'll expire. Don't care. And we can make that back in something else. We made $4,000 today, closing 3 strangles and 2 naked puts. I think I can afford $140 to make sure that my buying power is under control. All right, the next one here is there's just a remaining naked put on a long-term 112. I already closed the PDS on it, so there's nothing to do here. It's at 89%. I'm not taking that thing off. It's up $2,800. We're going to close it this month. I mean, it closes in 16 days. So why wait or why close now? Oh, let's let this thing percolate a bit. So we have another $2,800. I don't want to use the word guaranteed, but it's pretty good bet that this thing's going to expire worthless in 16 days, especially the way the market is going. All right, so there's that, and bear with me a minute. So we'll keep an eye on where we are. We got 5 minutes.
Critical alert from Microsoft.
Oh, that's nice. So we got a virus now too. So
blocked for security reasons. Call Microsoft support toll free. 1.
Give me a second.
890.
Who gave me a virus?
8. Your computer has been warned that it is infected with.
Yeah, we know.
Your email ID, bank passwords, Facebook login, photos,
and done. Okay, fixed. All righty, that was fun. All right, so we'll keep an eye on what's going on. Yeah, it's not my phone though. So it's my computer, which is great. So we'll start running some scans on that and get that fixed. All right. Anyway, this PDS here has already been rolled. This naked put, nothing to do on this one. Here, the market seems to be creeping up as we head into the announcement here in 4 minutes. So we'll leave that alone. And then this PDS, there's nothing that I've already rolled this on this particular FB112. I'm really debating now what to do. So if you look at this this trade, it's already been rolled once. So we've already captured. Okay, so we've already captured a good chunk of this. I'm going to see if I can re-pull up my trade tracker here without the crazy warnings. All right, on this FB112, let's take a quick look. On the FB112, I've already rolled for a $26 credit. So I've already taken in a $26 credit. That's pretty nice on this FB112. So I've already taken in $26 and I still have a $46 credit to go. So that $26 credit was already on a roll of the PDS. And now I can make another $46 on this particular thing, which is $2,300 more. Here's the question. And again, this is always the question. You know, A, it's still a 70 wide. I could roll again. So I could roll this thing again. We're starting to, get to, this naked put down here. I could roll again. I could close it. It's a 70 wide. So a 70 wide is potentially 3,500 in winning. So I could make 3,500 to close, but I'm already at 45 of the 75. So the question here is, do you want to roll again? Do you want to close? Or do you want to let this thing, percolate a bit more? I think maybe we could do another roll and roll this thing up. So we got a 70 wide. And let's see what we would do here. If we roll up, maybe 40 points and leave a 30 wide? If we roll, we can take in $24 more on this particular one and still have a decent trap going. So we continue to lock in some money. So let's do that. Let's just roll up 40 of the 70 points. I mean, closing it would be also pretty juicy at 45. I hate to give up that 45, but let's just roll up for now. We're going to put in an order at 24. Boom. All right. So we just took in another 24. So we've rolled twice we've rolled this fat bastard, this Originally, this was a 115 wide. So the first roll, we rolled up, I believe it was 45 points for 26. Now we're going to roll up another 40 points for 24. So we're going to take in over 50 points on this particular trade on 2 different rolls. Okay, and now this FB trade has definitely taken on a little bit of a new life of its own here as we roll up. So let me ungroup that, and we'll put this back on. I'm just going to call it a new 2-roll FB 112. And I will call it November 17th just to keep these separate. I'll group it. So there's that trade. I don't worry about any of this other junk on here. But we've rolled twice now on this FB trade. All right, so there's no reason to. I don't really want to buy these back. I don't want to pay any money on it. Yeah, well, my buying power going down. So the question would be, if I was in a buying power bind and I want to close these naked puts, okay, I'm going to free up a decent amount of buying power on that. I'm not really worried about the buying power yet on this. So 12 grand is a lot of buying power to free up. If I was in a buying power bind, I think then I possibly would Collierville, Tennessee. So I think I would consider doing that right now. I still have 16 days. If I need buying power, I could close these out now. I mean, it's only 2 contracts at $9. The most I'm going to take in on these is $925. I've already made $580. So for $400 and some dollars, I could free up 12 grand in buying power. Again, why I'm going to keep that just in my back pocket, knowing that if I get into a big increase or a spike in buying power, we'll take a look at that. So let's take a quick look at the chart. So obviously, as you can see here, here's the little day trading piece that I do. Here's the 3-minute chart. You can see right here at 2:30, you can see we're spiking up decently. We've moved up, 7-8 points so far on the Fed announcement. So you got the Fed announcement that's come out, and we're spiking on that. A lot of times you might fade the initial move. Is today different? I don't know. So we'll come back and take a look at it. But the initial move from the Fed here is that we are going to spike up a bit on this. So let's see. But I'm sure it's the Fed leaves rates alone. So they hold rates steady, upgrade their assessment of economic growth. Okay, so they think the economy is growing. And now we're up almost 9 points on the move, 8-9 points now, continuing to move up a bit on the session. So let's see what happens, but markets are liking it. Markets are moving higher. Let's go back to the platform and keep going. I'll let you know if anything changes on that, and we'll see if anything reverses. But that first move is always, sold off or something. So we ran all the way up to about 44.24 on ES, or on SPX. So 44.24 on SPX. Let's see if we get much higher or reverse or something like that on the session. But you can see we're doing pretty well. So again, I don't think I would I would do anything here. Now, Igor is also suggesting potentially I could buy 2 puts above my nakeds and then lock all of the BP as well. So what would that look like here November 17th if I wanted to trade November 17th? we want to go in here, and you got my naked puts down here. I think that's, which one is that on the FB? That's the 38.75. I've also got something else going on in here. So can I do something here? Sure. I can buy. I could buy down here. I can buy something. I don't know. If we did 100 wide, it would cost me $600 to free up 14 grand in buying power, which is not bad. I think I would rather spend the $400 and free up and just remove the whole trade. But you do have a hedge still on if you do it this way, which is essentially a vertical debit spread here. So if we do tank down past 3,900 in the next 16 days, fine. But I don't know that I want to spend that much money. I could go up here, do something a little bit shorter. If I did a 50 wide, it cost me $400. That's about the same cost as closing these two to begin with. So why not just close these, which would be an opportunity cost of $400. And the market, by the way, has it breached 42.25 and has dropped 5 points since then. So that first move being reversed a bit temporarily, but we'll see what happens. Anyway, the opportunity cost is closing this one for $400 of lost revenue, but booking the gains I have. Or I could spend $400 here, do the exact same thing. So again, I think it's 6 of 1. The nice thing about adding this trade, as Igor suggested, is it does create a hedge, a 16-day hedge there, which is totally fine. If it expires worthless, it's basically going to put me exactly where I am today. So I own a hedge on, so I leave a hedge at no cost, or I can take these off, not have the hedge, but free up the same buying power. So I think either way is probably good, but I think having a bit of a hedge might be nice, and it's going to certainly add. By removing these, I will free up some delta. I'll drop my delta, but adding this hedge also drops my delta. So either way, I think you could do either one here. Igor, is that what you had in mind? Something along those lines? So I'm just looking at the opportunity cost of giving up $400 if I close now, the naked puts, or spending $400 to create a put debit spread, so which gives me a hedge for basically the same type of cost. Either way, it frees up all this buying power.
You are right, and not only does it give you a free hedge, and if you wanted to cover the cost, you can just roll a part of your put debit spread that's closer at the money, make it a little narrower, and the credit from that move will cover the cost of your already cost-free hedge.
Yeah, perfect. So my dog apparently likes that as well. So good opportunities there. Yeah, either way. So there's plenty of things that you can do. It gives you so much flexibility in these trades to make some moves and adjust as need be. All right, so that's what we could do. It's not a bad thing. Maybe we can play with that a bit. Let's see, what would we pay to do that? Put a little bit of a hedge on. So we'll let that work a little bit while we're in here. So doing a couple different things. So number one, we just adjusted the PDS again for the second time, booked in another $24 or so in profit, and in order to free up some buying power, we're going to look to convert the naked put here into a vertical put spread, giving us a nice little hedge for the next 16 days in case things go awry. And by the way, all of the Fed move has completely been erased. So it went from 42.15 to 42.26 back to 42.15 again. So that's gone away completely now. So now we are actually heading lower than we were when the Fed started. Okay, so there's a little Fed excitement. Let's keep going through this thing. Now we have another 112 trade here. This one we've already adjusted to put debit spread. Okay, it's only 25 wide, but just by a quick glance over here, it's about 15 bucks. So it's still not, I could close it. I could do something else with it. This one is at 56% as well. You could do something similar here. So you can look to hedgeify these naked puts. I want more money out of this one. So this is the FB was a little different. This one here is a standard 112. It's not one of the long-term 112s. So I treat these a little bit differently. This was only a 60-day trade. So we've been in it 47 days. You could do the same thing here. I only put this on expecting, to get my $975 out of this trade. Well, I've already made a decent amount. Let's see if I can find this particular trade. So this is a 112 trade that's sitting here. It's the November 17th 112. So this November 17th 112, we rolled that put up for, or we rolled the put down, the long put down for $14. So we've already made 14 bucks on this trade, which is a decent little gain. So $14 on that particular trade. Okay, so we know 14 bucks times the 50. We've made 700 on the roll here already. My expectation going in was I was going to make $975 on this if it stays in the tail. Okay, so I'm almost already there. I can do a couple things. 3,900 is not far off of where we are. And again, because this is not a long-term 112, it was only a 60-day standard 112 trade, you don't get as far away on these puts. So 3,900 is a little closer. I could do something here as well. I could roll. I could close half of it. So if I wanted to close this particular position, and let's say I wanted to only close half of this trade, I'd pull in another 227. So I would now be at a complete break even, and I would reduce my exposure here. We just got filled on, I believe. I got to see what we just got filled on. We got a bunch of things working. So we'll go check that in a second. So you can do a couple things on this here. We can close half of it, and that would give me, coupled with the rolled down PDS and closing half of the nakeds, would book me my full 900 and some bucks, okay, which is what my expectation was for the trade. And I would still have a 111 working on this particular trade here. So this would become a 111 trade that is also in the trap, which has a potential of doing even better. Or I could close this PDS out right now, take in another 600 bucks. So I can make 600 more, plus close one of the naked puts, or close both, or turn those into a hedge as well. Any thoughts on that one from anybody? So there's a lot to think about here. I just want you guys thinking about, how do I adjust? What can I do? Which is why I think having some of these trades on and having some of that flexibility is important to you. Is we've already adjusted once, made money. We can adjust again and make this a complete risk-free trade, which means I took in all of the money I was expecting to make in the tail and still leave some things on. So you can do a lot with this trade. I could turn, this trade here. I could turn this into a 111. I could close out the put debit spread and leave one naked put running. I could also turn these naked puts into a put debit spread as well. So I could make another put debit spread out of the naked puts, giving myself a hedge while booking all of the profit in there. So if I wanted to do something along those lines, I know I'm throwing maybe too much in here. Hopefully this is making sense for everybody. Let's go back to November 17th, and we'll take a look down here. I think this was the 3,900. So we could do something along the lines of what Igor had pointed out before too, was if I close these naked puts right now, okay, I'm giving up. I mean, you can see it on the chart, but I'm going to make $445. Okay, if I simply take the $445 and I make this 3,900 that I already have, okay, I make that into a 50 wide. Yeah, let's go. Let's only use about $400 or something on this one. Yeah, we'll just leave it there. I could make it like a 50 wide or a 40 wide, something along those lines. If I make this a 40 wide, out of the money put debit spread, I mean, 39.40 in 16 days, not likely, but you never know. By the way, we are now down to 42.09, so we are now down $6 from where we were when the Fed made their announcement. So again, fade the initial move. I've said it every single time that there's been a Fed announcement. The initial move is never the initial correct move. Now, it doesn't mean we won't go up and erase it, but if you had essentially shorted that initial move or faded that initial move on the Fed, you'd be roughly 20 points to the good right now. Maybe not 20, but and we're back to where we were, about 42.12. But yeah, 16-point move. Yeah, you could have shorted SPX for a 16-point move or ES or something like that. I think it's always a good opportunity. All right, so anyway, back to this particular trade here as we bounce around. Lots of things that you can do here and decide what you want to do. Close it, book it, take the risk off, or I could create a put debit spread, which also frees up my buying power and creates a basically a free hedge for me. And then I still have the other put debit. I would have two put debit spreads. I'd be well hedged. If you're thinking the market's going to fall further, I could close the other put debit spread out, book that profit, use some of that to turn this into a hedge. So I do like these options. I'm gonna chill on this for now, but don't be surprised if I make a move later today. We'll see what the market is doing. I don't want to lose this trap, and I've already rolled it once. So my next move with only 25 wide, I probably wouldn't roll for 10 wide. I'd probably want to just close this. I mean, $14 on a 25 wide or $15 on a 25 wide, not such a bad deal to lock it in. Or I could simply just close the entire remaining trade on this, which would book me what was it, 14 and change plus another 4. I'd take another $18 in credit in. Actually more than that, because there's 2 contracts of these. So it'd be $400 plus 700. So it'd be 1,100. I could close this whole trade right now and just book the 1,100 on top, $1,100 more of what we already had. I don't like spending money here, so I'm closer to probably wanting to take it off. Yeah, Eddie, there's another option if you guys are thinking through it. So yeah, you could turn this thing into a put, a ratio spread. So you could do potentially a ratio spread on this thing. You could do it closer than 4. That'd be 100 wide ratio spread. It's pretty wide ratio spread, but you could do something along those lines. I don't know if I can model that properly. Okay, doing what Eddie just suggested, which is creating this ratio spread, probably doesn't look exactly like this, but first this would essentially be what it would look like here. So here's a ratio spread potentially if we just bought, instead of turning it into a put debit spread as Igor was suggesting, you could also turn this into a ratio spread. Okay, I have no risk to the upside. I do have risk to the downside on it, but you always have risk to the downside on a put debit spread there as well. So it's a good opportunity. It's something else to consider. This way, if you get closer, you start to get that little hump in profit. So if we drop down here towards 4,000-ish, 4,100, you probably start to realize some profit. So yeah, that's another opportunity there. to do that. So lots of things you can consider. And if I did that, I'd still free up about almost $8,000 in buying power. Again, buying power is not my concern right now. It's just what would you do to take profits, adjust, and make some additional cash. So a lot of things I can do on that 112. Here's another long-term 112. This one we've already rolled the PDS. Even the rolled PDS, which is 25 wide, is now almost $20 to close. That's pretty hard to pass up. That's pretty hard to pass up. 18, almost $19. $19 to close. I could make $1,900. That's, to me, it's free money. It's $1,900 in cash today to just take that put debit spread that we've already rolled off the table. And we're at 76% on these naked puts. So we're going to make $2,300 on these naked puts right now to close. Otherwise, we're going to make over 3,000, not 3,000. Yeah, we're going to make almost 3,000 alone on these naked puts. And I can book yet another 900, what was it? Yeah, $1,800 here. It's hard to manage all this. There's a lot of profit here that you're sitting on, waiting for the market to do something. I don't think there's any shame in taking this thing off right in here at around $18. And do you want to wait for $7 more, which would be $700? I mean, $700 would be nice, but you could do something with those naked puts to create a second put debit spread way down here, free up the BP and see what happens. I could also create something that's a whole lot cheaper as well to free up that buying power. So I could sell something along these lines, spend $700 down here, free up all 16 grand and just have that sitting there. Which the difference between that would be just close it. Anyway, all right, so lots of opportunities here. This is a tough one. I don't really know what to tell you to do on it. If it's my money here, I'm really thinking of just closing this put debit spread right now for $19 instead of waiting to get 25. I'm doing it. Done. All right, I just made $1,875 today. I'm going to have my entire month done today. I might go on vacation. I'll go down and visit Gabe down in Florida again. So we're going to go somewhere and do something on all these trades. So what do you have left in here? So we just destroyed this particular trade. I got these put debit spreads. Gabe, how's the weather, by the way? Because if I come down, I'm bringing a hurricane with me. Yeah, beautiful. All right. So maybe I'll head back to the condo here. We got enough money to go somewhere. Cool. This one, not quite there yet. I don't think I would close it. $12 on a 25 wide. Not ready yet. But I think taking 1875 out of a 25 wide was a good move. All right. Here's our roll that we did. So we did roll this FB 43.25 up to 4,300. So let's go back and we got to fix this trade. We probably have some things bleeding over into some other things. Yeah, got to keep. I just got to keep an eye on track of which ones I just moved. What did we do here? All right, just $12, 43.25. We closed at 43.25. Okay, this was on the 112 trade, not the FB. All right, so we closed this 43.25 and 43.25, 42.75. Looks like we rolled that particular one down. So we'll leave that alone. Nothing to do on that one for now. We've already booked some trades. This BA 112, yeah, this is just a hedge trade that's up 300 and some percent, which is kind of a funky thing, mainly because we've got some gains going on. here on the put debit spread, and we're not going to make much on the naked puts, but we've already made some money there. This thing's up $500. I'm just going to let it roll. Got plenty of time to get down to this trap. Here's another 1-1-2 trade that we got working, and then here's a 60 DTE hedge that we have on. This hedge is still profitable. At one point, this was up $3,000. Now this hedge is only up $500. It's a hedge. I don't care. I don't expect to make money on a hedge, at least not right now. I'm going to leave this hedge running. Why this particular hedge? What was I doing with this hedge? So there's some questions on hedging that we talked about. If I take a look at my account starting to look like a frat party with all these moves. So the day after a frat party, so it's a mess. However, if I look at getting stopped out on all my spec trades, okay, right now a 2x loss would be about 12 grand on my spec trades. On my 1-1-2s, if I got stopped out, that would be another 4 grand. So that's 16 grand so far. If I got stopped on my 1-1-2s, not the LT 1-1-2s, the 1-1-2s on futures and my spec trades, and if all of my strangles stopped out, that would cost me about $23,000. Okay, I just want to show you how I'm working this. Okay, 16 plus 23, okay, it's going to put me right around $40,000. I really am not hedging the long-term 1-1-2s. They already have some built-in hedges, which are slowly going away. Well, there's another trade executed. We are making a bunch of money today. All right. Every ding is a couple grand. All right. So this might be the biggest P&L day I've had. Not net lick day, but anyway. So on this 60-day hedge, what do I have to put on a 60-day hedge to hedge $40,000? $40,000 covers me stopping out on all of my strangles, my standard 1-1-2s, and all of my spec trades based upon 2x losses on everything plus 1x losses on the 1-1-2s. Okay, 40 grand covers everything but the long-term 1-1-2 trades. That's what this hedge was designed to do, was to give me about a $40,000 cushion if we tank. So how does this particular trade look? All right, let's go in and I believe this is it right here. And let's take a look at how this hedge was built. So this was did I miss anything? Yeah, I did miss something. Okay. All right, here's this hedge. So, how does this hedge play out? What is it going to do for us? All depends on what we do. I'm looking at a decent downtrend that's going to pay me about 40 grand on this particular hedge. Just want to make sure I got the two right puts on. So this is it. All right, so we're now obviously we've moved up a bit, but we're at 42.50. Let's just use 4,200. Okay, if we drop 10%, that's going to put us around 37 and change. So if we drop 10% fairly quickly, okay, this hedge is going to go somewhere here around, I don't know, $46,000. So if I look at my P&L expected on this, 46, 47,000, we could actually drop, if I only needed 40 grand, somewhere around 37.60. So 37.60, okay, here from 42.43 is a $483 drop. So it's about 10%. So if we drop 10% in a very short amount of time, this hedge will cover me stopping out on every single trade for the next 60 days. Okay, so I'm good for 60 days on this particular trade. Okay, if we go up, okay, it's going to obviously take a bigger drop to get down here, but if we're going up, I don't have to worry about hedging, right? So the market goes up. What the heck are you hedging? If we start to drop in here, okay, you're going to start to see this paying off. So I'm hedging a 10% down move, okay, that would cover every single trade that I have running except the long-term 1-1-2, assuming I get out of them at my stop losses. Now, if we drop 10%, oh, but what if we drop 10% overnight? If we drop 10% overnight, you got bigger problems to worry about for most of us. But I'm worried about 10% in a short period of time. Okay. So 10% in a short period of time. Maybe that's a week. Maybe that's 2 weeks. Okay. That's where things are going to get into trouble. 10% overnight, there's not much you can do except put your head between your legs and get into a fetal position and just hope that you can get out of trades overnight. Okay. But I'm not worried about the overnight move. Now, if it goes down overnight, I'm still going to make a bunch on this hedge. I'm still going to make 40 grand. However, I might not be able to get out of everything at my stop loss. But the fact that I have futures trades and no other trades on means for the most part, I can trade 23.6. So I can get out of futures trades at midnight, 6 a.m. as soon as we start to see things go awry. By the way, the market's back up to 42.30. So initial move got reversed. We ran up to 42.26. Then we dropped to 4,200, bounced right off 4,200 and ran up 30 straight points in the last 15, 20 minutes or so on the market. So you can see things are moving pretty quickly. And you can see this hedge is losing some value today. All right, but we're still up $4,500 now on the day. So we're making more money the longer this day holds. And VIX is now down. Well, it's not down anymore, really. The VIX is down 6% now to 17. So the VIX down 6%. So you're getting volatility dropping. You got the markets going up. Like all is good, right? This is where you start to think about hedges at some point. All right. Now, did this all make sense? Yes, yes, or yes. A lot of different things. I got to figure out what half of these adjustments were that I just did. I'll get these posted for you guys in here. But I like the trades that we did. We closed 3 more trades today. One for debit. I think this was just putting on this last one here. This 400. We spent $465 to open up that put debit spread trade. So yeah, I got a debate on putting that spreadsheet online. I may do it. So yes, Ashvin, I'm considering it. But I got to remove a lot of stuff from it because it has all my other personal accounts on there. So got to be careful of that. All right, and a new spreadsheet's coming out soon anyway. All right, so there we go. There's ES. Let's quickly look at gold. Gold's got one lone strangle because I closed 2 strangles already today for 50% winners. This one's at 14%. I got to get a new trade on gold. And the market's now up 35 points since the low of the day. I got to get a trade on gold. Gold's dropping today, which is nice to see. I like it. Gold volatility dropping as well. This 37 IV is the worst IV on gold in a week or two. So it's not exciting, but gold volatility is absolutely dropping like a rock today. It's gone down about 6%, 5% on the session, but still decent volatility. I need to get a new strangle on. It's time to do that. So let's go put a strangle on gold. If we're looking out here, I'm going to go out to 90. We got an 85-day. We got an 85-day expiration. Let's see what we can put on here on gold. And I want to take a quick look at the charts as well, just to see where things might be sitting on here. Now, gold, got too many things open. And you can't see everything. I can't share everything because I can't share multiple screens. But gold's down $9 today, which is good. We like to see that. It's well inside of the, the 3 ATR, the Bollinger Bands. It's right in the middle. It's not far off of on the weekly chart. Gold is pretty close to, yeah, Paul, fantastic. 47 grand since you followed it. Now, if you've been telling me you've been following it for like 6 years, okay. But if you're telling me you've been following it for, a short period of time, that's even better. So congrats on that. Oh, anyway, so let's take a look here on gold. The 3 ATR is 1834 and the 7 delta is about 1830 or so. So we're right at the 3 ATR on the weekly, which would correspond anyway to the 7. We like that. Let's go up here to around the 6 delta. And let's just see how this thing looks. And the 6 delta here, 2305. I kind of like the open interest here at 2300, but 2123, way back here, just outside the expected move. That's the upper end of the weekly 3 ATR. So we are way above that. I could probably ratchet that in a bit. 2300. Can gold go higher? Yes, it can. But I think I'm gonna put on this 2300 here. I like it. So 940 looks pretty good. Now I got to size it appropriately for my account. My account is now sitting at 300 and I don't know what it is. 320, 321, 324 now. I think today. So if we look at that, I got to size this so that my so that my credit is going to give me what I'm looking for here as far as, so I can do 3 contracts because a 2x loss needs to be less than 2% of my net lick. If my net lick is 320,000, that means I can put on a trade that the max loss will be 6,400, which means at a 2x loss, half of that should be my credit, which would be 3,200. And 4 contracts is too much. So we're going to stick with 3 contracts here on gold. And we're going to pop this thing on. Boom. We got a gold trade now. So we're in a new gold position. We're doing well on this. Buying power is still sitting here on 66%. Still a little high. I'm okay with it. I want to get this trade on anyway. So I'm going to let my buying power be a tad high in the 60s right here, because I think I have some other things that are going to come due. All right, so we just put that trade on, and then I will also put in a 50% close at 470. What did I put this on for? 940, so yeah, 470, okay. All right, boom, so I got the working orders to close both of these strangles. I'm in good shape. I got my gold strangle replacement trade back on. And then the last thing here is we've got a 112 trade on copper. This thing's up 90% in 23 days. There's nothing to do here. I'm not closing these naked puts. I'm not going to adjust this really tight put debit spread. I got nothing to do here. We're just going to let that move off. So the only things we have to do here is we've got to fix this December 29th trade. Okay, so this long-term 112. Is the one we rolled. So this long-term 112 is what we just rolled. We'll ungroup it. I said ungroup it. Can't do that. All right, so when Tasty lets me do this after either shutting down or tomorrow, I will regroup this trade, so I can't ungroup it. No, oh, I just did. It's crazy. Okay, so this is a new PDS December 29 long-term 112 trade. I at least changed my groupings so I can follow what the heck I'm doing here. So I changed this PDS. That's the one I just rolled for you guys. So we rolled this one down, and now this is the current trade that's working in here. So that's what's working. That was this roll back in here for $12 on December 29th trades. So that's what we did here. All right, so there was a lot. So yeah, just a couple months, Paul. Fantastic. 47 grand. That's pretty good. Don't know too many people making 47 grand a year, much less in a couple months. So fantastic stuff. That's a lot. I didn't expect to go this long. We went over an hour on this, but I think we played around with a lot of strategy. So bottom line here, you can do a ton with these 112 trades. And as you saw, not only can you roll up the short puts, you can then potentially close out half the naked puts depending on where you are. You could turn those two naked puts into a put debit spread. You could, by buying two puts above that, have an out of the money put debit spread on it. You could do what else was suggested by, I'm not even sure who made that comment on it. I think that was Eddie, about turning into a put ratio spread. So you could turn those naked puts into a put ratio spread. You could then close the PDS out. I'm treating this naked put and I'm treating this put debit spread as two separate trades. I will be recording them differently now, probably because it's just easier to keep track of all of these moves because we are moving a lot. I'm going to treat them as two separate trades. It's one trade when I'm putting it on, understanding what my goal is, which is let's hit the tail. And if we get lucky, we get some trap profit. But I am going to treat them as separate trades. I know Kevin is like a light years ahead of me. He's already putting on just PDSs and naked puts and not really worrying about matching them up, which is totally fine as well. Okay. If I'm going to treat them as two separate trades, well, then why put them on at the same time? I'm not going to get into the whole timing issue of the market. I'm a bad market timer. Okay. If I put a put debit spread on today, when the markets are up, and what are we up now? 46 points on the day. We're up 46 points. Okay. So what would you do today? Well, I would put a put debit spread on an up day, and then I'll put a naked put up on a down day. Okay. Well, what if you put, the put debit spread on today, okay, and the market goes up for 3 more weeks? Well, you missed your chance to get a put debit spread at a good price, or I'm sorry, the naked puts at a good price. I don't like market timing it. So I like to put the whole trade on at the same time, but I will treat both legs separate because, again, Toss is forcing you to put 2 legs on, or I'm sorry, Tasty Works is forcing you to put 2 legs on, but I want to manage them separately. So I want you guys to just, in your head, putting on a 1-1-2 trade is fine, but really consider that you're managing a put debit spread and you're managing naked puts, and manage them completely separately on it. Okay? So manage separately, but I put them on at the same time because market timing is not my thing. Okay. If the market drops 50 points tomorrow and I put a put debit spread on today, well, then I'll look like a genius and I can put my naked put on. But if the market doesn't go down, what are the odds that the market goes up or down tomorrow? Anybody put it in the chat? What's the odds that the market goes up or down tomorrow based upon all the info we have? Okay. It's 50-50. Okay. You can't, you can use charting, you can use whatever. It's still 50-50 shot that the market goes up or down tomorrow. Okay. Which is why, 50 delta is the middle. So when you're putting on a trade at the money at 50 delta, you have a 50% chance of going up or a 50% chance of going down, right? Why market time when I'm only going to be right half of the time, and knowing that I suck at market timing, I'm probably going to be wrong even worse than the odds are. So if you want to win, probably play blackjack against me or something else, because I'm great at probabilities here and I'm great at craps. I'm terrible at anything else that has odds of picking the odds. I'm terrible at picking the odds. I'm good at playing the probabilities. All right. So anyway, there's the reason I like to put those things on separately, or take them off separately and manage them separately, but I put them on together. There was one more question I'm going to jump into, and then we'll get off this session here today. We'll record it and we'll post it. I think there was a question about IV and FB trades or something. On your FB112, do you like high IV for this? Well, I like high IV for everything. Okay, the higher the IV, the better. If the VIX is 22, 23, 25, I'm in heaven. Okay, I want IV to be as high as humanly possible so that I can put trades on. The reverse of that is when you're putting trades on at, when we got beat up on gold trades, most of the time that's because we put those gold trades on in March or February in low IV, and then the IV shot up to 90 in a day. Okay. Well, yeah, you're going to get beat up when it goes up. However, if I'm putting the trades on in high IV, you saw that one gold trade that I took off today. I was only in it for 19 days. Okay. So when you put it on at high IV, I can take that off quicker than 30. 30 is about the normal IV time frame. But when IV was rising, it took me on ES, it took me 60 days to close the ES strangle today. It took, I'm sorry, 55 days. And on one of my gold strangles today, it took 61 days because we put them on in a low IV environment and we moved to a higher IV environment. But the high IV one closed in 19 days. So obviously, the higher the IV, the better. But if you wait, and I've made this point a bunch of times in Discord, if you wait for high IV, you're going to starve to death. Okay? I got to have trades working. I have to hit $9,000 a month to make 3% in realized gains. Well, I can't make that money if I don't have any trades on. Okay, so if you're going to wait, if you're going to be afraid to put trades on when VIX is at 12, I mean, VIX is back to 16, people. It was 22 a couple of days ago. If you think the IV is too low and you don't put trades on now, you're not going to make any money. So you've got to put trades on in any IV market. But obviously, when you're looking for an FB trade or something like that, putting that on, when IV's up can be helpful. But on the other hand, and this is something I think, if you want to catch the trap, would you put on a FB trade when the market's up or when the market is down? When the market's up, IV will be lower. When the market's down, IV will be higher. But what environment do you want to put an FB 112 trade on? When the market's at, running higher? Yeah, because you want to catch the trap, right? If I put it on when the market's low, what's my chance of catching the trap? Well, I am putting it on, it's safer when the market's down. But if you're trying to put on a trade where the goal is to catch the trap, a 112 trade, the goal is not to catch the trap. The goal is to make tail profit, make your 3% a month, okay, and make a ton of money a year on those if we only go into the tail. The trap is a bonus, and we're seeing the bonus and how that plays out right now. We got jacked up profits, okay, for 30 days now because we dropped into the trap as a bonus. It's just, all it did was give you a little juice, okay, a little dopamine rush on your trading, okay, when you fall into the trap. But that's not the goal of a 112. The goal of an FB 112, okay, and the goal of a BA 112. So let's take a look at the BA 112. I know we're going long, so if you guys got to jump, fine. Market, I'll try to be done before the market closes. Let's look at this BA 112. This is December 15th. Let's see if we can. Tasty used to be, if you highlighted it here, it would highlight it over here so you could see what the hell you're doing. And then it doesn't work that way anymore. 4110. 4160. Okay. So here's the FB. I don't know what the hell I'm doing. All right, here's the FB 112 trade. I don't even know if we can fit this on the screen. Okay, so here's the FB 112 trade. Okay, here's your tail up here. Because an FB 112 and a BA 112, they're hedges. Okay, they're meant for no profit up here, hardly. I mean, 155 bucks, yeah, big deal. Okay, they're meant to catch us in this big fat trap. Okay, and this is the BA 112 has this big long trap that stretches from roughly 4,100 all the way down to 3,300. This is an 800 wide trap. Okay, an 800 wide trap, which is not the norm on your trades. So you're not looking at a whole at a whole lot of difference here. Versus, sorry, you're looking at a big difference between a standard 112, which has a much smaller trap but a bigger profit in the tail up above here. Okay, this tail, 155 bucks, too small, it's not worth it. But this trap, real big. If we sell off over the next, couple months, we're going to hit that particular trap down there. I did that. It's beyond me. But okay, so there's the BA 112. And then if I just look at a standard 112, And you guys all know these, but I'm going to just share anyway. Let's look at the 3,500, 4,150, 4,200. So this is the standard long-term 112 trade. Okay. Here's what this thing looks like. Now, what do you notice that's, potentially different here? Is look at the tail up at the top. This tail makes 2,630, not 115 bucks, but the tail makes 2,600 bucks for me. And that's my goal. Okay. My goal is to make 2,600 bucks on this particular trade. The bonus is stuff that happens in this trap that can juice it all the way up to 7 grand in profits. So trap is a bonus, tail is the goal on 112 trades. On an FB, the fat bastard 112, where I'm looking for a big fat trap with no tail, the goal is the trap only. Okay. And on a BA 112, which is the big ass, which is the really wide one, you can see, and you look at the size of the, the goal is the trap, not the tail, which has no money. The trap here on a standard 112 is running from about what, 4,200 to 3,500. It's only 700 wide. Okay, it's like 200 points smaller in width than those other trades are, or than a BA is. Though the big A is, hundreds of points wider. Okay, and the FB is taller. It's instead of 7 grand in the trap, it might be worth 8-9 grand or something else. So these trades are all designed to do something different. So just understanding the difference between a long-term 112, a BA 112, an FB 112, or just a standard 112, 4 different trades, 4 different objectives. 2 of them tail profit with a bonus in the trap. 2 of them is all trap profit, like a hedge that I'm shooting for. And you can probably come up with a million other versions of things that you guys want to do. But I think the gold comes in when you know how to adjust and you're rolling up or down that put debit spread. You're taking off the naked puts, turning it into a 1-1-1, or you're turning those naked puts into a put debit spread or a put ratio spread. And then you can also take the put debit spread that you shrunk and still close that out. Knowing how to adjust these things when you have the opportunity and knowing how that's going to affect your buying power. If I really felt like 66% was just way too flipping high, then yeah, I would do what Igor and I were talking about earlier, which was either close this, turn it into a put debit spread, or do something along those lines. Because the FB trade doesn't make any money in the tail, keeping these things till expiration on the naked puts is not really a big deal because the goal was the trap. Okay, so I think turning this thing into that trade, which is essentially what we did with selling these 2 long puts up here, that made this a 50 wide PDS now. So this FB trade is no longer just 2 naked puts and a PDS. It is 2 PDSs now. Did I confuse everybody on that one? So if I ungroup, this whole thing now is a new, November 17. I don't know how many characters I can even put into this thing. New November 17. This is the FB 112. Can I do 2 PDS? There it is. Okay. So this is what this trade has become now, kind of cut off, but that's what this fat bastard trade is now. This trade is no longer a 112 or FB 112. This trade is technically a 1122, but it's 2 put debit spreads. One, I turned the naked puts into 1 put debit spread by adding these 2 longs today, and I still have this put debit spread working, and I freed up a bunch of who knows. So I'm down to 60% BP now. What did we, I don't know if you guys remember what we started with, but I think we were 70 something when we started this session. And we're now 60. So my buying power is now 60%. Okay. We have dropped our buying power thousands of dollars. A lot of it was due to this trade and some other things that we've done. and taking some things off. And don't forget, we put a gold strangle on, and we just used a bunch more buying power to put that gold strangle on, and we're still only at 60%. So we managed our account pretty well today, booking a ton of profit. You just got to keep track of everything. All right, I hope this made sense to everybody. Yeah, Eddie, yeah, put a 60 wide today on just because you like the short strike and you got as wide as you can for a small credit. You can make it anything you want. Okay, the world's your oyster on the 112. You can make it any size. You can call it the Eddie and make it something completely different. You can call it the Ashvin. You can call it the Igor. You can call it the whatever the hell you want. Just call me, to the table for money, is what I want. So let's adjourn there. I think this was good stuff. This is a long session today. For people that weren't here, hopefully they'll rewatch it. For you guys that are on today, good stuff, good adjustments. Hope this makes sense to everybody. Keep trading out there and stay safe, everybody. We'll let everybody go for the day. Enjoy a great rest of your day. I will post this video I'll probably post it in strategy guides. I don't like to post these IN only ones in just the vault. If it's something specific for you guys, put this in the strategy sessions in Discord today. So when I get the chance, I will put this in there. I do not post these on YouTube. So if you're not a member, you don't get the benefit of it. So, okay. We'll talk to you guys later. We'll see you in the chats. Take care. Take care, everybody. Bye-bye.